Hello everybody. So I know many of you have been waiting for a HIMSS video and I'm happy to provide it. Let's talk about HIMSS. HIMSS is still dirt cheap. What is going on? What happens? What's happening? Anyways, so HIMSS right now still trading at a 0.08, rule of 40 is a 75, forward revenue growth I estimate to be 62%, and it's trading really at less than 2.5 times forward sales. The key point that I want to make in this video is that HIMSS is dirt cheap with or without GLP-1s. It's too cheap to ignore, and so let me make my point here. So first of all, briefly about the business. The business was growing very fast, and then it started growing much faster in Q3 of 2024. That's when the GLP-1 offerings were introduced at a mass scale, and when really the GLP-1 business started making a lot of money and making a lot of revenue for HIMSS. But it's worth noting that GLP-1 is only 225 million out of almost 1.5 billion in revenue, so it's only 15.6% of total revenue in 2024. HIMSS is not a GLP-1 story, even though the market would have you believe that it is a GLP-1 story. HIMSS is a story of health verticals, blockbuster drug verticals, and GLP-1s are one of these blockbuster drug verticals, but they still make most of their money from the other verticals: anxiety, sexual health, hair loss, dermatology. This is where they make all of their money still. So that's point number one. Point number two is the revenue growth has accelerated. The subscriber growth has accelerated slightly. It's remained more stable. So I'm guessing there's some cross-selling going on. The marketing is effective. You may remember that FUD back then. The marketing is very effective. It's less than a year. The investment in marketing is recouped in less than a year. And this is a business that has 90% recurring revenue, 75% plus gross margin profile. In fact, 79%. Payback period of marketing, like I said, minus a year. And it's important to understand this industry that they are the main leader. Like HIMSS is the biggest player. HIMSS is nearly half of telehealth. A business you may have heard of, which is Row. You see, Row is not even 10%. I mean, Row is tiny compared to HIMSS, right? It's roughly 10%. So Row is small. And I also want to point out the guidance, right? The GLP-1 guidance, that's what we're going to get into. HIMSS guided that without branded solutions, right? Without branded options, because that's the key question now is, are they going to sell branded semaglutide? Are they going to sell branded tirzepatide? They guided that without that, they will still at least achieve 725 million of weight loss revenue in 2025. Keep in mind that a large portion of the revenue is actually about 100 million of these 225 million is for oral solutions, namely metformin, bupropion, but it's mostly metformin, right? It's those pills, weight loss drug pills, these diabetes drugs that were kind of indicated now for weight loss, and that a lot of physicians are more comfortable prescribing for weight loss as a secondary indication, as a secondary benefit. This is almost a new trend, a new practice in medicine that you didn't even find 10 years ago. And so, and metformin is quite effective at weight loss, actually. And liraglutide, which they just launched. Liraglutide is going to be a big part of that business too, and personalized semaglutide. The exemption is not going away whenever that exemption is actually documented. You can still compound if you have a documented reason. You do a blood test and the person has a B12 deficiency and you have the proof in the blood test, then and only then you are allowed to manufacture a compounded version of a semaglutide. And that's going to be, I think, still a minor part of the business, but it's still going to be a big part of the business. So that's the GLP-1 business. The GLP-1 business, so let's get to this. The GLP-1 business is the new category, and it's the fastest growing category of HIMSS. But right now, I see these articles of people sell HIMSS because they're going to lose the GLP-1 business. It's as though this business was only a GLP-1 business. No, this business is 15%. It's 15% GLP-1. And in fact, if you look at the pre-GLP-1 growth, if you look at this chart I drew here, pre-GLP-1 growth trajectory was really strong. It was growing at a minimum of 45% year over year. And that's the number I'll take in a second in my estimates of what revenue is going to be in 2025. It was growing at 45% for the worst quarter. So it was still growing well into the 50% prior to the GLP-1s. And of course, when the GLP-1s came, it was an explosion to the upside, and that's how we almost had nearly 100% growth year over year. We nearly had 100% year over year growth thanks to GLP-1. I'll give a kudos to GLP-1. They went from nothing to 15% of the revenue in about 2 quarters. That's very impressive, or a meaningful quarter, right? Anyways, to a mass level quarter. So anyways, they're predicting we're going to have 725 million of revenue, like I said, in 2025 from GLP-1, and that was a prior guidance. And don't forget, HIMSS also has a history of sandbagging. The market is now thinking that GLP-1s are dead, and look at that stock price. I mean, look at how awful they've punished that stock price. It's like all of the hope of GLP-1 was entirely gone. Of course, some of that drop is due to just the market selling off anything that is a small cap right now and is considered risky. Ooh, bad. But anyways, let me try to see what the revenue is going to be for 2025. That's the point of this video. Because then, if I have the revenue number, then I can give you some scenarios as to what the valuation could be. So, in 2024, right? In 2024, we had 225 million of GLP-1 revenue and 1.25 billion of non-GLP-1 revenue. Those other verticals, right? Sexual health, ED pills, hair loss, anxiety. Anyways, so total revenue in 2024 was 1.47 billion, okay? 1.48 billion. Now, we know that the GLP-1 revenue has been guided to be at least 725 in 2025. So GLP-1 is going to move from 225 to 725. And the non-GLP-1 business, what is it going to move by? Well, that's the big question here. I got to find a growth rate for that pre-GLP-1 growth trajectory. And that growth rate, I am looking at the history before GLP-1. And so you can see this is the revenue growth. And you can see the inflection point for the past 2 quarters. You can see that was the GLP-1 inflection. So I'm picking the lowest year-over-year growth rate ever recorded for HIMSS, which was in Q1 of 24. I'm taking that lowest growth rate over rate, and I'm assuming they're gonna revert back to the lowest growth rate, that is 45% year over year. So I'm assuming the rest of the revenue is gonna grow at the lowest growth rate, which is plus 45%. And of course, we're almost at plus 300% for GLP-1 revenue. So I'm assuming this worst case scenario, and that would give us from 1.25 billion to 1.8 billion. So the total revenue for 2025, as I predicted this way, believing the guidance of HIMSS for 25 for the weight loss category, and believing in the most pessimistic scenario for the non-GLP-1 business, then that growth is growing from 1,477 to 2,541, which gives you a growth rate of 72%. That's a growth rate of 72%. My number right here, when I use 62%, that's the analyst's number. It's all of analysts, they write what they think is going to be in 2025, and you average it. So that's 62% growth rate. It's the analyst's number. When I walk you through this simple back of a napkin math, I'm getting a revenue of 2.5 billion, which translates to actually 72% growth for the whole thing. So what if analysts are wrong? And what if growth won't be 62% like analysts predict, but it will be my math? It will be this math. What if the growth rate for 2025 is this math? Well, then look at how cheap HIMSS would be, right? HIMSS would be a 0.069 with my math. Dirt cheap. Rule of 40 jumps up. All right, and now let's assume that the entire HIMSS business, so let's assume they keep the weight loss category, but the weight loss category is not going to grow as fast as I anticipate here. The weight loss, as HIMSS guided, not as I anticipate, as HIMSS guided. Let's assume the GLP-1 revenues don't grow as fast as HIMSS guided. Let's assume they grow at the same rate as the entire business. They grow at the same rate as the entire business. Well, in that case, I'm applying that same revenue number, right? 1477, but 45% revenue growth. I'm assuming 45% revenue growth. In this case, it'd be lower than analysts. Would the business be still dirt cheap? Absolutely. It will be a 0.11. I struggle to find businesses that are near 0.1 in my spreadsheet, more than 200 stocks. I struggle to find businesses this cheap. Rule of 40 would still be nicely achieved at 58%. And now, this is the worst case scenario. What if in the worst case scenario, and this is a ridiculous scenario, which I don't think is going to happen at all, because some people are going to switch to generic liraglutide, which is wholly owned by HIMSS. Some people are going to keep their metformin, and they're going to keep the metformin weight loss pill prescription. They're happy with that. But let's assume the entire weight loss category just disappears, completely vanishes. Right? That's the absolute worst case, very, very ridiculous scenario. Okay, let's assume that. And what do we get in that case? We get a business value as the 0.129. So to give you an idea, the worst case scenario is cheaper than a bunch of stocks on which I've pounded the table on this channel for being cheap. It's cheaper than Transmedics. You know, I love Transmedics on this channel. It's cheaper than Oddity. I haven't covered Oddity in a while, but I think Oddity has a very interesting business model in the beauty sector, kind of a HIMSS of the beauty sector. It's cheaper than Oddity, and that's the worst case scenario here, that is cheaper than Oddity. The worst case scenario is cheaper than SMCI, and I could make a case that SMCI is so dirt cheap, it's not even funny. It's cheaper than ELF. ELF is a 0.17. My worst case scenario for HIMSS is a 0.12. Right? The best case scenario, not even the best case, I guess the base scenario here, if we believe the guidance, the base scenario is a 0.69. 0.069, that's the best scenario. So the best scenario is 3 times cheaper than ELF, right? And think about Celsius. Celsius and other stocks that I've praised on the channel. Misunderstood company too. I've called it cheap many times. Celsius is 0.37. Right, so and then you start comparing this to HIMSS, and you realize, oh wow, what HIMSS is so much cheaper. It's not even funny if you compare all these businesses. So this business is so cheap, so cheap, and it is so cheap. Even if the entire weight loss category, the whole thing, disappeared tomorrow, it would still be dirt cheap. And that's the point I'm going to make, because I'll briefly address GLP-1s and I'll make a full video on GLP-1s soon. But, when I make that video on GLP-1, we need to not forget that we're talking about 15% of the business. We're talking about the minor part of the business, the still minor part of the business growing faster. Anyway, so in the next video, I'm going to address GLP-1. But, Let's remember how important. They're not important. GLP-1s are not important to HIMSS. I know this is a crazy statement to make, but GLP-1s is just one of the verticals. It's our decade's blockbuster, and it may be that the regulations make it so that our decade's blockbuster is only going to be rent-seeking for big pharma. That's possible, but we have the blockbusters from the prior decade, right? Anxiety meds. Lexapro, escitalopram, or something like that is, anyways. That's a huge blockbuster, right? SSRIs, SNRIs, they're in the public debate, right? They're game changers. A lot of practitioners believe they are game changers, but they're very much part of the modern day debate, especially with Gen Z, and that's a huge business, right? The ED pills, right? The ED pills, that's the enormous blockbuster from the late 1990s up until the 2000s, and then they went off patent. But that's still an enormous blockbuster, right? I mean, as the population ages, you have men who just start finding out about these drugs, and so that's an enormous blockbuster. That's going to keep being a blockbuster. I don't see that going away, right? Air loss solution, minoxidil, right? Another blockbuster product. This one has been a little older. You had Rogaine and all that sort of stuff, but still a blockbuster product. And yes, now we have GLP-1s. That's our decade's blockbuster. It'd be great if HIMSS could participate in our decade's against blockbuster, but they will nonetheless, in my view, participate in the lesser part of this blockbuster, which is the normalization of prescribing diabetes drugs for people who want to have weight loss, right? Because we've known diabetes drugs, one of the side effects is weight loss, right? They cause weight loss. And so if you give this to a person who doesn't have diabetes, but is like pre-diabetic or something, it's going to lead to some weight loss. And so there's been a normalization of the use of drugs that have been around for, I think metformin has been around since the 1940s or something like that. And they're prescribing it. They're prescribing it, right? Liraglutide, they're going to keep that business. They're going to keep that business. And let me address the elephant in the room, which is the whole Lilly debacle, which is, you had I think it was I can't remember the name of a news organization, but serious news organization saying, okay, well, it's coming, Hims partners with Lilly Direct, it's coming. So they're doing the same thing as Roe. They're going to offer tirzepatide via Lilly Direct. And then, of course, a few days later, Lilly says, no, that's not true. It's not coming. So what is going on? Because this is Roe, right? This is Roe. Roe has it. Roe has the partnership with Lilly Direct. Well, I think what's going on to me is very obvious. Is that, remember what I told you about the market share, right? Roe is roughly 10% of the market share. Hims is 5 times bigger than Roe. So can Lilly onboard Hims, or is it a bluff? I don't know. It could be a bluff, right? It could be a bluff that they can't. And that's what the CEO has said on the call multiple times. We engage with them. We want to sell with them, but they don't have the volume. He said that multiple times, and that's why they're launching this campaign to use your voice to address Congress, and because that's a big debate. Is it a shortage? Is it not a shortage? It's very fishy. If there's no shortage, why can't Hims get it, right? There's probably a shortage. Or they anticipate supply issues, right? They anticipate supply issues because if Hims got it, that blockbuster would continue at Hims, and then all of the sales would go through Hims, because Hims is not a small player like Roe. Hims is 5 times bigger than Roe. And I'll conclude with this, which is Lilly Direct. It's great. I love that you have a discount, Lilly Direct, and I know Ozempic does the same thing, right? I love that you have a discount, Lilly Direct, but you're misunderstanding Lilly Direct and Roe. Roe, it doesn't do that mistake. Roe copied Hims, or I don't know who copied who, but Roe's doing it right. Like Lilly Direct, you still need to ask your doctor to send your prescription to Lilly Direct. You need to ask your doctor to send your prescription to Lilly Direct. How much does a doctor visit cost in the United States, right? Well, at my significant other's clinic, it's between $176 and $496, and it depends on how the visit is coded in the system. And if the doctor says, sorry, I can't prescribe you the drug, you're still on the hook for, say, I don't know, a $377 office visit. You're still on the hook for that, and you didn't get the drug. Like that's the very big innovation that Hims has, is that the doctor visit is embedded in the pricing of the drug. And if you go see the prescriber, the practitioner, the MD, you go see the MD, right? And the MD says, I'm sorry, you don't qualify. You're not big enough. Right? Your BMI is healthy. I'm sorry, I can't prescribe you that. Hims does not charge you for the office visit. That is the major innovation, and it is a mistake to think that office visits are going to be covered by most insurance companies. It is a mistake to think that if you go for your physical, which is often free, you're going to be able to assess, the doctor is going to be able to assess whether they can actually prescribe you that drug, or whether they're in the mood of prescribing you that drug. Right? Or whether they do the ping pong. It's a classic. When a doctor is uncertain, they'll do the ping pong. They'll be like, okay, well, let me send you to a specialist. Right? Anyways, it's like the whole prescription uncertainty is what Hims deals with. And in fact, this questionnaire is so good, I tried to see if I could qualify for a GLP-1. Turns out I don't. Anyways, like it's the way it works. It's the way it works. Anyways, I'm done with this, but I think this is a misguided understanding of these platforms. These platforms are all about the doctor visit and the medication bundled in one product. And anyways, so thank you for watching. I'm done. This was not investment advice. This is not financial advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.